So I want to welcome Terry Papineau. He called the tech bubble correctly. He called the oil run-up correctly. He called the precious metal run-up correctly. And now he is all in on Uranium Junior Miners. So really happy to have you on to pick your brain about that.
Thank you. Thank you for inviting me. I'm here to talk about one of my favorite subjects, which is uranium.
Great. So yeah, just to start, high level, like why are you so excited about uranium?
Well, as you said, in my career, I was a financial planner at one point in time, and I realized that when it comes to investing, a lot of people do exactly the opposite as to what they do as consumers. What they like to do is they see a high performing fund or a stock that's run up, and they like to chase. Whereas when they're out consuming, that's not what they do. They'll actually chase the sales. Craft dinner's on sale here at a great price, and they'll actually load up. So that's what I was trying to do for my own investments and for my clients. And with regards to precious metals, I was looking at the price of gold, which was probably $250 in the 1997, 1998 timeframe. And said it's impossible for gold to stay at $250 an ounce. And sure enough, I was right. It took a little bit more time to go up to almost $2,000 in 2008. But when you can see like really bottoms and those patterns, then you could take advantage of them. You can also see it when there's a bubble. All of the tech bubble and at the end of the 1990s. Again, I was still in financial planning, and I actually lost a good client because he wanted me to place him into a tech fund, and I just said I can't do it. It's too high. Something's going to happen, and of course that big bubble burst, and a lot of money was lost.
Yeah, exactly. And that's what this channel is all about, just finding like the early stage assets that no one likes at all, that are completely hated. And is that what drew you to uranium?
Yeah, sorry. Exactly. So, I watch Bloomberg every day. I do this now that I'm retired. I do this all day long. I'm at this 8 to 10 hours a day. And I was watching something related to Cameco, and they were talking about how Cameco had these high quality assets, a great company, probably the best uranium company in the world at the time. And just in a real big bear, and I went, so that caught my attention, and I started doing research, and I saw that since Fukushima in 2011, the uranium market was in a very big bear market, and the price of equities was extremely depressed. We had 450, 500 companies at the height of the last uranium bull market between 2006, 2007. And it went all the way down to about 2017. We had maybe 45 uranium companies. Some have come into this space in the last year. But so that was indicative that uranium was in a deep bear market. And then it was just to do the research to see, well, is this going to last long? And at the time I thought it would take, I was telling everybody it would take 3 to 5 years for this investment thesis to play out. And here I am in my 5th year now, where we're really seeing, it's starting to heat up now. And it took longer, and this is what I tell everybody, but I'm happy I was wrong, that it didn't happen quicker, because the longer it's been taking, the better it's been getting. It's just absolutely astonishing, the opportunity that exists in uranium right now.
Yeah, and your early stage portfolio in these uranium juniors is probably doing extremely well right now. So congratulations on that.
It took a lot of time, but as I said, from 2000, I started investing early to 2017 into uranium, and it's only really last September that things started taking off, and my portfolio overall is up about 300% since last September.
Wow, that's what it's.
But I'm expecting a lot more.
Okay, great. So, we'll be with you in the uranium trade, and if you come up with any other undervalued ideas, it's hard to find things that are undervalued nowadays, but
yeah,
just let us know.
That's right.
So you're still bullish, even on the juniors, even though they've run up quite a bit since March of 2020.
I am. Yeah, I am. Now, again, everybody has their own investing style. I can take a little bit more risk here because my wife and I are both retired. We have a good pension income, so I can take a little bit more risk, and I understand the risk as well. But I still see like $20 million market cap companies that have outstanding projects or properties, mostly in the Athabasca Basin. And these companies during the last bull market, even lesser quality companies in the last uranium bull market had market caps of 300, 400, 500 million. Some of them even more than that. So when you're looking at a good company with good management, with good properties, that has a market cap of $20 million, I mean, it only needs to run up to 100 million. And I think that's going to occur pretty easily in the upcoming bull market.
And what was that basin you mentioned, and what country is that located in?
So the richest place to find uranium, or the best place to find uranium in the world, is in what's called the Athabasca Basin. And that's in one of our Canadian provinces called Saskatchewan. It's one of our prairie provinces, and the Athabasca Basin is situated in the northern part of Saskatchewan. And that's where you find the richest, highest grade deposits in the world for uranium. And it blows all other deposits and all other grades out of the water. We're talking about deposits that have, on average, some deposits, 28% grade uranium. And you compare that to some deposits, let's say in Africa, where it's 0.1%. Wow. It's not even comparing apples to apples. It's out of this world grades.
Yeah. So we'll look for companies up in that region then. So great. So, I know you're a student of this, you study it all the time. You've probably come across some bear cases on the internet, and other places. So if you wouldn't mind just kind of poking some holes in some of those bear cases and just talking about your thoughts.
Sure. Yeah. So probably to me, the bear case scenario is related to another nuclear incident. We hope, of course, that that's not going to happen. But if it did, depending on the incident, it would have an impact on the uranium market. But if it's just one reactor, that impact would be temporary. The gap between the supply and the demand of uranium right now is so huge that the run-up in price of uranium is basically inevitable right now. Even with I don't want to say minor, but a smaller, just one reactor incident like that. Now, Fukushima really hurt because Japan decided to close down their entire nuclear fleet of 49 nuclear reactors in 2011, which led to this big bear market that we've been in for 10 years now. So one of the things that is mentioned often is that, the Kazakhstans, they've got big deposits there. They're going to ramp up production. In the past, that was true. But since 2018, that company part of the company is a public traded company now. So they're behaving like a publicly traded company, where they, instead of going for quantity, they want quality. So they've reduced output. They have an agreement with Kazakhstan. It's called the Subsoil Use Agreement, where they have a license to produce so many pounds. And they're allowed to vary that production. They can go down by 20% or up by 20%. So they've cut production for the past probably 3 years now by 20%. And they've already announced, they've given guidance that 20% will also apply to this year and to next year's production. So they have no plans in ramping up. And if they did, they could only ramp up by 20% over the base subsoil use agreement.
It's good to know.
Another bear case is, there's big uranium stockpiles in the world, and those are going to flood the market at some point in time. China has a big stockpile, and they're going to flood the market as well. well, let's talk about China for a second. They've already announced that they want to increase the amount of electricity that's produced by nuclear. They've set very aggressive targets, and they've updated those targets for 2025, 2030, and 2060. So they need to build 6 to 8 nuclear reactors per year from now to the end of 2030, which is going to increase their consumption of uranium considerably. And if they do have these huge stockpiles that are going to flood the market, why are they taking stakes in some of the best uranium deposits in the world? I think they own 20% of fission uranium here, which is in the Athabasca Basin. They own 20% of NextGen, which is the largest undeveloped uranium deposit in Canada right now, in the world, basically. They've purchased a 49% stake in 2 mines in Kazakhstan in the fall, and they concluded that agreement this spring. They bought an entire mine in Africa. So what's the strategy here? They want to dump all this uranium on the market, but they're buying up assets. It just doesn't add up. There's some people that also say, that miners, it costs them $45, $50, $55 a pound to make the stuff, but they can only sell it for $30. So as miners, what do? They make it up on volume. Well, that also doesn't add up. As I mentioned, Cameco, which is a Canadian company, they own the 2 largest uranium mines in the world. The best uranium mine in the world is called McArthur River. It's in the Athabasca Basin. It's owned by Cameco, and they've shut down that production. It's quality tier 1 pounds that they just don't want to put into the market. So that argument of miners producing more to make it up on volume just doesn't hold water. We have many mines, like there's zero production in the United States right now. For some time in Canada, there was zero production. Now, Cigar Lake, which is Cameco's 2nd largest mine, just opened up again. They were shut down temporarily because of the pandemic. But since December, Canada was producing 0 pounds of uranium. Kazakhstan has, as I mentioned, they've cut their production by 20%, which is the most that they can cut. So that argument that miners are just going to produce more and make it up on volume doesn't make sense. So on the flip side of that, the catalysts, the positive catalysts, are just tremendous.
Great. Yeah. And it'll take, once the spot price does rise, it'll take time, right, for all the miners to kind of get into production and, potentially make the supply meet the demand. How long do you think it'll take for that to balance out?
Well, there's been some really good work done by many people on this. Like, for example, Mike Alkin has done calculations on this. He's got spreadsheets, and he's talked at length about this, so he's very credible on that. Marcelo Lopez, same thing. Justin Hume. What people need to realize is that there's 440 odd nuclear reactors operating right now. There's 50 under construction. As I mentioned, China's going to ramp that up to 6 or 8 per year. We just had an announcement this morning that there's a new agreement between Russia and China to build more plants. So these plants cost so much money to build that, when you put up your capital and your borrowing costs, you need to operate these plants for a long period of time, in order to recuperate your investment. So just the existing and the ones that are under construction are going to consume a lot of uranium. Right now, the consumption or the demand is about 185 million pounds per year, and that's going to increase.
Right.
Even if you, to answer your question, even if you restarted all idled capacity right now, you wouldn't be able to meet that demand of 185 million pounds per year. So that's right. And that demand is going to increase So as time goes on, we're going to, and supply diminishes because deposits have a certain amount, and then they're done. There's new mines that are going to need to come online. So we have some that are just idled. We have idled capacity right now that's going to come online as price justifies and as they're able to sign contracts. But at some point in time, all of that idled capacity, when it's producing at full capacity, we're going to have to bring new production online. So that's why you've got a lot of developers that are waiting on the sidelines. And some of them have purchased uranium to be able to give them credibility and to be able to sign contracts with utilities so that they're able to deliver pounds and then start producing. So we're going to need a lot more production online by 2030. As a matter of fact, the CEO of Kazatomprom, which is the world's largest uranium producer, said that we're going to need like 2 more to 4 more Kazatomproms by 2035. So wow. In terms of uranium mines, that's just around the corner because it takes so long to find these deposits, to do all of the studies, get all of the permits, and bring these assets under production. So, I mean, we're right there right now. 2021 is like, it takes 2 years for uranium before it's taken out of the ground, before it can start to be consumed inside of a nuclear reactor. So contracting is going to be starting very soon, I imagine.
Great. And, I hear a lot about, as far as like making positions in this space, I hear a lot about Canada, Africa, not much about America. I mean, there seems to be a debate about whether or not people should be bullish American production or not. But also, like, what do you think about Australia? Because I know there's a lot of reserves, but are you bullish on Australian producers and American producers?
Yeah, I don't have Australian companies in my portfolio. Unfortunately, it's not because they're not good assets. I've spoken about this before. It's because my trading platform, it's very difficult for me to purchase equities on other exchanges other than North American exchanges. So there are good assets in Australia. You asked me about the United States. There are good assets in the United States as well. The issue is the cost of production. So because the grades are lower and for all kinds of reasons, American producers need prices that are higher than other producers. So, like in the $50 to $60 range. So because they're higher cost pounds, in my opinion, those mines are going to come back online later on in the cycle when the uranium prices are that high. So I own I have positions in 2 American companies for my own personal strategic reasons. But there are good companies in the United States. However, as I mentioned before, because of my investment goals, I focus more on junior companies, junior explorers.
Yeah, that's great. Like a basket approach of the juniors. So you just get a lot of upside, but diversified risk, right?
That's my strategy, yes.
Great. So one thing I want to ask about, because I don't know a lot about it. So small modular reactors, I hear it as a driver for uranium demand in the future. But I've heard some skeptics, but then some people that are bullish on it. What is your take on those?
Well, I don't know who's skeptic about small modular reactors because the news coming out on SMRs is fantastic. Almost every day there's a new piece of information that surfaces regarding a different, like in Canada, for example, I think it was yesterday, there's a news piece on the fact that some of our indigenous communities are supporting SMRs because a lot of these communities are in very remote locations, and the only way that they can have power is in most cases by liquid natural gas fired plants or coal-fired plants, fossil fuel fired plants to generate electricity. So now they've come with a statement saying that they're completely in support of SMRs, where they could use these SMRs to power their isolated communities. In Canada, we have agreements between three of our provincial governments to collaborate on developing small modular reactors. We have one of the smartest men and the richest men in the world, Bill Gates, has a company called TerraPower, where that's basically what they're trying to do, is trying to develop a technology that it will be smaller. You can, it costs less money to build it. It's faster, it's cheaper. And the technology that they're working on, if I'm not mistaken, will actually use spent uranium fuel. So, there's so many applications possible for SMRs. In the United States, what we're hearing is that the Biden government has supported the idea of replacing old coal-fired generating plants, and just taking the coal plant out of there and plopping in a small modular reactor. So you already have all of the infrastructure, and now you could put something in there that's going to be way more efficient and that's going to produce green energy with no emissions.
Absolutely. It sounds great. So how far away are we from that technology? And by SMR, we're talking about just a smaller reactor than like one of the huge plants, essentially.
Yeah. So from what I understand, they're called small modular because they're actually built all at the same area, at the same place, and then they can shipped out, and then they're installed wherever they're needed. So because all of the building takes place in one area, they could do it faster, cheaper. It's just presenting a lot of advantages. So to tell you how far away we are, I couldn't tell you. I don't know. But I would say probably sometime around the end of this decade, we should start seeing these SMRs into production.
And I can see why that would be a huge driver if you're saying they could be shipped all over the world to remote areas to have green energy, and they're safe, right? Yeah. They're safe. I'm sure they have a way of containing any sort of radiation.
That's right.
So great. Is there anything else you wanted to add that we didn't cover about kind of the bull case for uranium?
Yeah, sure. I think there's a couple things I wanted to mention. The other thing that just popped into my mind with regards to the bear case is that, fusion is going to come and replace fission, or they're going to throw molten salt in those reactors. Like, the bull case for uranium is on the existing reactors and the growth in the industry. And so, the uranium cannot be replaced in these existing nuclear reactors. You can't throw something else in there. So the demand for uranium is going to be there regardless. And that demand, as we've already spoken about, is increasing. So to throw in another catalyst, almost on a weekly, if not monthly basis, we're hearing now about life extensions to nuclear reactors. The World Nuclear Association comes out with a report twice a year in September, where they lay out the supply-demand scenarios for uranium. And a lot of these scenarios take into account that reactors are going to come to end of life after a certain amount of years. Well, now what we've been seeing since 6 months is that reactors, their lives are being extended by 10 and 20 years. Well, that's demand that had been taken out of the demand scenarios. But now, because those nuclear reactors will stay open longer, then you're adding in demand. And this part is substantial. It's just like, extending the lives of these reactors is substantial. So that's great news for the uranium sector. The second thing is Biden's infrastructure plan. What we're hearing and what is being thrown out there is that there will be support in some form for nuclear power. Joe Manchin, the senator who's on the energy committee, he came out very strongly in support for nuclear and extending the lives of these nuclear reactors in the United States. So lots of catalysts, but the biggest catalyst is what we heard, what came out last month, where one of the physical uranium funds, which is called Uranium Participation Corporation. There are two funds that buy physical uranium. The first is called Yellowcake. They're based in London. The second is Uranium Participation Corp, and they're listed here in Canada. What they do is they actually go out and they buy physical uranium. They hold it and they wait for the value of uranium to go up in price so shareholders can see value in their investment. Uranium Participation Corp had an agreement with Denison Mines here in Canada, and Denison was managing the fund. Denison came out with an announcement in March that they were going to buy physical uranium, and that just blew everybody out of the water. Nobody was expecting that, and shortly thereafter, Uranium Energy Corporation, an American company, and more, developers came out with the same announcement that they would purchase physical uranium on the spot market. But everybody was saying, well, what's going on with Uranium Participation Corp? How come they're not buying? That's what they exist for. They should be buying right now. And Denison, who's managing Uranium Participation Corp, they're buying. So why isn't Uranium Participation Corp buying? Well, lo and behold, what was going on is they were in negotiations with Sprott and Sprott will take over the management of the fund. And this news is monumental. This is, I think that many people still don't understand how huge this is going to be for the uranium sector, because Sprott is a well-known precious metals resource managing company. They have 200,000 clients worldwide. They manage 8 to 10 billion. They have 8 to 10 billion under management. They manage some of the best precious metals physical trusts. They have a gold trust. They have a silver trust. They have a platinum and palladium trust. And the way that they run their trusts is different than the way that Yellowcake and Uranium Participation Corporation manage their funds currently. In order for Yellowcake and UPC to buy uranium, they need to wait for, the unit price of their shares to be higher than the actual value. And then they're able to raise money, a certain amount of money. For example, Yellowcake, this winter, they wanted to raise 100 million, but that got upsized to 140 million. Then they issue shares, then they have money, then they buy uranium. And this can occur a few times per year, but it's more of a cumbersome, kind of difficult process to be able to buy uranium. Whereas the way that Sprott runs their trusts, they have access to, at the market or at the moment funding. And when there's enough money flowing into the trust, they can actually buy uranium. So Sprott could actually be buying uranium weekly, daily, depending on how much money is flowing into the fund. And so this is huge. So that means that you've got someone now or an entity with means that's going to be able to scoop up as much uranium as they want or need, and as much uranium as is available. So that's going to put a lot of pressure on the uranium market, on the spot uranium market. And the last bull market, the way it was played is you had some hedge funds and some financial players. What they did is they entered the market. They started buying equities first. Then they used their hedge funds or large amounts of money to start buying physical uranium to drive the price of uranium up, which drove the price of their equities up. So they were making money with the equities, and they were making money with the price of the physical uranium that was going up as well. So now with the Sprott Physical Uranium Trust, these hedge funds and these financial institutions, it's a complicated thing to go out in the market and buy physical uranium. You need to, get the agreements. You need to store it somewhere. You probably need licenses to be able to buy it. Well, now they don't need to do that. Now these hedge funds and these institutions have a vehicle in the Sprott Physical Uranium Trust where all they need to do is buy units of this trust, and they'll probably be coming in with heavy money, a lot of money, which is going to give Sprott a lot of money to be able to buy uranium. So this is, in my opinion, it's a complete game changer. All of the people that are following the uranium sector are talking about it. It's going to have a very big impact. And Sprott is taking over management of this fund. It's supposed to close at the end of this quarter, which would be the end of June. But by the time they get everything they need ready, we're thinking it's going to be, maybe July, August, September, when they actually start to buy and make an impact on the market. So, and we're also thinking that Sprott and some of their clients are going to want to do the same thing as in the last bull market, start buying some of the equities before they start scooping up all of this uranium and driving the price of uranium up, which probably explains what we've seen. We've seen, some nice increases in the price of our equities in the past 6 months.
Absolutely. It's like just a further driver for the demand with the securitization of uranium, right? And the more ETFs that go in, the more demand, and that's just a huge catalyst. And one thing you brought up that I forgot about was that Bill Gates is now bullish on uranium. Love him or hate him, he is the establishment, he kind of represents that. And that is just so major.
He's been involved with Terrapower for quite a while now. Like, this is not just recent. Before when with your old president, they had Terrapower was going to were looking into transactions with China in order to bring the Terrapower's technology over to China. But you ran into roadblocks with some of the tariffs and some of the geopolitical things that happened between China and the US in the last 4 years. But so Gates has been involved with nuclear for quite some time now. Right. So another catalyst that has been really emerging is that when you look at this sector, you've got primary demand for uranium, which comes from obviously the utilities, the nuclear reactors, and you've got primary supply, which comes from producers. The sector has always had surplus. So there's always been what's called the secondary supply. Some people have talked about the megatons to megawatts program, where uranium was down blended and be used in nuclear reactors. So there was always a secondary supply. But what's emerged this year, really, which is related to this Sprott Physical Uranium Trust, is now we've got a really robust secondary demand, and that became really evident when the junior developer or the developers started buying uranium in March and April, and with the Sprott Physical Uranium Trust, now you're adding a much bigger secondary demand that wasn't there before to start scooping up all of this uranium. So this is going to have a very big impact on the price of uranium.
Absolutely. So they realize how absurdly, unsustainably cheap the price is, and they're picking it up at these levels because it's cheaper to do that than to mine it. So it's kind of they're arbitraging the price.
That's right. And I'd also like to, while we're talking about secondary supply, secondary demand, there's been some people have mentioned that one source of secondary supply was was Russia as a government, being able to supply U.S. utilities. Well, that's over. That's been over for quite a few years. The megatons to megawatts program has been over, where uranium was down blended and being sold to U.S. utilities. That doesn't exist anymore. So that form of secondary supply is gone. This year we have 2 mines, Ranger and Cominac, that would sell uranium into the spot market. They closed because their deposit is exhausted. That's gone. So at a time when you've got less secondary supply, now you've got increased secondary demand coming online. So yeah, it took a long time for this thesis to play out, but the longer it's been taking, the better the conditions have been getting.
So thanks so much for coming on. Where can people go to learn more from you?
Well, I'm just I'm on Twitter. Obviously, there's a really nice community there. I don't write a newsletter or anything like that. I'm just a regular person, that really likes the setup in the uranium sector. But a lot of people have reached out through Twitter. They can direct message me if they have any questions or if they just want to chat. As you can tell, I love talking about this stuff.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.